Something weird is happening. Gold just hit $3,400 an ounce, a new all-time high. Tariffs are back in the headlines, and for some reason, it feels like the entire global economy is holding its breath. But here's what's really strange. In the middle of all of this chaos, Bitcoin isn't crashing. In fact, it's holding steady, quiet, calm, almost like it belongs here. And if you zoom out, the question becomes impossible to ignore. Are we witnessing the moment Bitcoin breaks away from the stock market? A moment we've been waiting for forever. Is it finally happening? And it becomes something much bigger. In today's video, ladies and gentlemen, we're going to unpack that theory and why what's happening right now could change the way we think about Bitcoin forever. In today's video, guys, we're gonna break down why gold is spiking, why traditional assets are starting to feel broken, and why Bitcoin, of all things, might finally be taking center stage in the global story. We're talking about a potential global shift in capital, the kind that could completely reshape how the world understands money itself. So without further ado, ladies and gentlemen, let's get into it. Let's call it what it is, shall we? The world feels, I don't even know how to say it, but like a little off, right? You don't need a PhD in economics to feel the tension right now. Oof, you can cut it with a knife. Just look at gold. It's been ripping to all-time highs, past $3,400 an ounce. Congratulations, Peter Schiff. Congratulations. Yep, okay. And that's not the only shiny metal doing shiny metal things. That's fear. That's people running to the old safety net. Because when the tariffs hit the headlines, when trade tensions absolutely spike, and when markets flinch, investors start reaching for something, anything that feels stable. And Bitcoin, well, I'm not gonna lie, it flinched too at first. But that was a knee-jerk reaction, a quick knee-jerk dip. Totally normal in bull runs. Completely normal in Bitcoin's entire lifespan. Markets panic on impact. It's what they do. That's how markets work. But then something completely unexpected happened. Bitcoin didn't stay down. It snapped back, climbed, stabilized, while the rest of the markets stayed shaky. Bitcoin chilled, good old Bitcoin, caught its breath and held the line. And this is when people started noticing, because this wasn't the same old risk asset behavior. Bitcoin wasn't acting like a tech stock like it had in the past traditionally. It wasn't following the crowd. It was doing something completely, entirely else. Something stronger, if you will, something different. And that little voice started whispering again, the one you hear in every crypto corner of the internet. Bitcoin was built for moments like this. It's what it was invented for. And maybe, just maybe, this is the moment people start realizing that might actually be true. So what makes right now feel so strange? Well, the signals are everywhere. You just have to know what you're looking at. Gold hitting all-time highs. Not because people all of a sudden remembered that it's shiny or that it's so valuable and so rare, but because they're nervous. That's usually where the money runs, when things start feeling fragile. And then we've got the bond market, the supposed fortress of safety, government bonds, those age-old IOUs from Uncle Sam. And they're suddenly looking kind of broken. And I know that's a dramatic word, but think about it. If inflation is rising faster than the yield you're getting, then your safe investment isn't growing your money. And that's the core value, that's the core use case of these things. And then it's slowly shrinking in value. Meanwhile, China is quietly unwinding its holding of US treasuries, with over $700 billion still left to dump. And if that continues, the US may lose one of its biggest buyers of debt at a time when it needs its demand more than ever. That brings us to something called the Triffin dilemma. Here we go, ladies and gentlemen, the Triffin dilemma. A problem the White House itself is starting to admit. See, to maintain the dollar as a global reserve currency, America has to keep exporting dollars to the world. But doing that weakens its own economy at home. It's a catch-22, and it's starting to catch up. And the central banks, they're stuck between two bad choices. Raise rates to cool inflation and risk completely choking the economy, or cut rates to spark growth and risk fueling even more inflation. It's a tightrope walk over a pit of economic anxiety, and they're wobbling, and in rising national debts, geopolitical tension, currency wars. And you've got this growing sense that something's off. The system itself, the one we all assumed was permanent, might be showing a few cracks in the concrete. To me, it feels like something fundamental is shifting underneath us. And when the old playbook stops working, people start looking for a new one. Now, here's the part nobody is talking about. You're welcome. The real reason Bitcoin is acting so strong right now, even while the world looks like it's unraveling. For years, in fact, its entire life, Bitcoin moved like a tech stock, risk-on asset, highly volatile. When the NASDAQ was up, so was Bitcoin. When the Fed sneezed, Bitcoin caught a cold. They literally danced to the same song. So everyone just assumed, same asset class, same behavior, risk on, risk off. But you and I know better, right? What if that was never the real connection? What if it wasn't Bitcoin acting like tech stocks, but both getting lifted by the same tidal wave underneath? That wave? Global liquidity. Think of capital like water. For years, most of that flow started in the US. The government spending, and that current carried everything with it. Apple, Nvidia, and yes, Bitcoin. But what happens when that current changes? What happens when the money stops flowing from the US and starts rippling out from everywhere else? From Asia, where growth is accelerating. From the Middle East, where oil revenues are exploding. From Europe, where regulators are redrawing the financial map. As macro analyst Luke Grauman put it recently, the world is looking for neutral reserve assets, and the dollar no longer fits that bill. Where does that capital go? It's not just going to pile into US bonds, and it's probably not going to trust any one country's stock market. That would be foolish. It's going to look for neutral ground, something apolitical, something borderless, something trustless, something permissionless. And you guys know that's where Bitcoin steps in the spotlight, because Bitcoin doesn't care about your currency controls. It doesn't care if the Fed cuts rates or if China slaps on new tariffs. It's global, it's portable, and it lives entirely outside the political chaos. Bitcoin is quickly becoming a hedge against systemic risk itself, not just prices, but the fragility of the entire financial infrastructure. So maybe, just maybe, Bitcoin is no longer following tech. Maybe it's diverging, catching new flows of capital from investors who don't want to pick sides anymore. And think about it, we're all becoming more global citizens. And that shift, that's not just about safety. That's a new use case entirely, not just digital gold you bury and forget, but a decentralized money network, one that's quietly becoming a new foundation for a financial system that doesn't trust any of the old ones. For decades and centuries, gold was the ultimate reserve asset, the benchmark for national wealth and monetary stability. But now, something new is rising, and the US might be about to make the clearest statement yet. Imagine this headline: the United States sells its gold to buy Bitcoin. Sounds impossible until you realize that option is already on the table right now. There's a growing movement inside Washington to do exactly that. It's called the Bitcoin Strategic Reserve. If you're watching the channel, you know all about it. And it's being spearheaded by US Senator Cynthia Lummis with active support from President Trump himself. And here is how it can work. The US currently holds over 200,000 Bitcoin through asset forfeitures. Most of it just sitting around unused, chilling. Under the proposed plan, those coins would be transferred into a permanent Bitcoin reserve, treated like gold on the national balance sheet. No sales, no auctions, just cold storage. But it gets wilder. The US also holds gold certificates valued at just $42 an ounce. And right now it's $3,400 an ounce. At today's market rate, that gold is worth $700 billion. The idea is simple. Revalue those certificates at current prices and use a difference to quietly accumulate Bitcoin. No new taxes, no new debt, just a strategic portfolio shift from gold to digital gold. And here's the hypothetical no one's ready for. What happens if Fort Knox doesn't have all the gold it claims? Maybe it's all there. But would you be surprised if it wasn't?
Look, I mean, we hope everything's fine with Fort Knox, but we're going to go to Fort Knox, the fabled Fort Knox, to make sure the gold is there.
The last time the public saw inside was in 1974. In a financial system built on trust, that uncertainty is its own liability. Even if a fraction of that gold reserve turns out to be missing, miscounted, or rehypothecated, confidence in the dollar could crack overnight. And when the market panics, it doesn't run toward closed vaults and dusty ledgers. It runs toward transparency. It runs toward assets you can verify. And that's where Bitcoin's biggest strength kicks in. Live, open, and impossible, unlike gold, to fake. Meanwhile, Bitcoin is transparent by design. Every coin, every Satoshi is traceable, verifiable, and accounted for in real time. In a world demanding financial transparency, that difference is hard to ignore. And while the proposals are real, the shift hasn't happened yet. But proposals like the Bitcoin Act and Bit bonds are gaining traction, backed by real legislation, real senators, and real think tanks. This isn't a crypto fantasy, ladies and gentlemen. It's actual policy blueprint sitting on desks inside DC. And the goal, 1 million Bitcoin reserve, roughly 5% of Bitcoin's total supply, owned by one government. If that happens, it would be the biggest signal in financial history, because once the US begins accumulating Bitcoin as a sovereign reserve asset, every other country will follow. Just like central banks rushed to gold over the last 5 years, they'll be forced to secure their own Bitcoin exposure. Everyone right now is just sitting around like, are they going to do it? Here's the part markets aren't ready for. If the US liquidates even a small portion of its 800,000 tons of gold, it could flood the market, shaking investor confidence and sending gold prices into a tailspin. That would mark the moment Bitcoin takes over gold as the modern reserve asset of choice. And then game theory kicks in fast. What happens when China starts buying? When Saudi Arabia adds Bitcoin to its oil reserves? When smaller nations front run the big player to lock in early access? Bitcoin goes from outsider status to becoming part of the core playbook for nations. Suddenly, Bitcoin is no longer just an asset class. It's a strategic weapon, the next benchmark of national strength, the signal that a country is ready for the new digital monetary order. And for regular investors, it means the exit ramps are about to shrink. Because if governments are buying the dips, maybe you should do the same here. You might not get another chance to buy before they do. And that brings us to the bigger picture. Because this isn't just about government policy or macro theory anymore. It's about what happens next for you, for capital, and for the global financial system. Let's for a second zoom out, right? This video, by the way, if I need to say it, is not financial advice. It's not a magic chart pattern, and it's definitely not a call to sell your house and go all in on Bitcoin, although maybe I might have. But something is happening and you can feel it. And guys, I've had discussions with people in Washington, and this is happening. The movement of capital is changing, and it's pointing somewhere new, across borders, across systems, and across trust lines. The old financial world is literally crumbling, and capital is looking for places that feel safer, smarter, and built for decades ahead. Gold's rise is telling us one thing. People still want safety, but Bitcoin's behavior, that's hinting at something much bigger. A new kind of safety, one that's global, digital, decentralized, and open 24/7. Not to mention no political affiliation at all. Not right, not left, it's global. It's a sign the foundation of the financial system is being rethought from magic internet money to ETF listed, Wall Street approved, government backed. It's becoming a new cornerstone of the future where money moves differently. And to you guys, my beautiful, wonderful, very intelligent, smart audience, if you're watching this video, you're probably already ahead of 99% of the people out there. This probably is not a foreign concept to you. This video probably makes a lot of sense. We've been talking about it for a long time. And if you guys aren't subscribed to the channel, and if you're new, welcome. My name is Chasse. My goal here is to help you guys understand the entire geopolitical landscape as it pertains to crypto and how you can hopefully improve your financial future by doing so and paying attention to these videos. Because by the time the headlines hit, it's usually too late. Understanding the rotation before the crowd is how wealth is built, not by chasing hype, but by studying the signal in the noise and preparing accordingly. So wherever you stand, curious, cautious, or all in, just remember, the game is changing. And if you're paying attention now, pat yourself on the back, you might be right on time. Ladies and gentlemen, thank you for watching. Do me a favor, smash that like button if you learned something. And remember to stay sharp, stack your Satoshi, stack your Bitcoin. And ladies and gentlemen, we'll see you in the next one. Bye-bye.